on a day, Tim Stenovec, where I was told we were getting our first back-to-back decline on the S&P in 6 weeks. What's happening?
There's still a minute left.
Okay.
That could happen.
Did I jinx it?
Oh, hey, we're actually seeing stocks, the S&P 500. Oh, never mind. I was going to say it. Moving a little.
We're on the knife side here.
You got to be fast.
Yeah,
Tim,
not really. The S&P 500.
Yeah.
I guess
Emily
we can go ahead and pretty much
think about
call
all
that
this?
unchanged, guys.
Do you let her talk?
It's still green. It's not, I mean, I guess we could call it unchanged, but not a lot of, oh, there we go, an unch. Not a lot of action after the S&P 500's
I love this
best
minute-by-minute,
six-week
second-by-second update.
win streak.
It's like a
not a lot of action in the bond market today either, given the big moves that we saw yesterday, right? The 10-year yield got to 4.21%, and there was talk that maybe we've gotten to the point where rising bond yields are starting to threaten stocks. That was the storyline yesterday. Maybe not so much today.
Yeah, and I love that too, because it gets to this idea that whatever narrative that you're crafting in your head today is probably going to have to be changed within the next 2 days. And this has really been the seesaw that we've seen now, right, for the last few weeks now.
Look at this, guys. 22.7%. is what the S&P 500 has done so far this year. The fact that we've gone 6 weeks without back-to-back declines says something about the rally.
Yeah,
I love that. That's a grind higher.
I think the thing I love about that most, Tim, is that you included the 0.7%. You could have just rounded up to 23%.
Not yet.
All right.
End of the year. End of the year, I'll do it.
All right, EQT ringing the bell over there. And who is that? Oh, look at that. Cohen and Steers also ringing the bell there at the NYSE. The Dow Jones Industrial Average in the red on the day as we wait for these numbers to settle. But it looks like it's going to basically be unchanged on the day. We were just talking about those back-to-back declines on the S&P. It looks like as these numbers settle, we are going to be in the red, down about 3 points or roughly less than 0.1% here on the day. The NASDAQ composite higher on the day by 0.2%, as is the NASDAQ 100, while the Russell 2000 closes out the day lower by 0.4%.
All right, taking a deeper look at the S&P 500, pulling back the layers there as things get settled. 316 stocks did move lower in the S&P 500. 186 did move higher today.
We may, after all, get that first 2-day losing streak in 6 weeks, Romaine. It's just for you.
I love it.
All right, let's take a look at the sector performances.
I didn't even print up a hat, Scarlet Fu,
I know.
For this.
Well, don't print it up just yet. The consumer staples were the best performing group. That was led by Philip Morris. That group up 0.9%. Communication services and energy also finishing higher, but not by a whole lot. Industrials were your weak link with names like General Electric, Lockheed Martin, and PACCAR all down at least 4% on earnings. Materials also losing ground along with utilities.
All right, let's get to some of the gainers here. I want to start with General Motors. Shares surging today, having the best day in more than 4 years, up close to 10%. How's that for rounding up, Romaine?
I like it.
The company reported that they're just making a lot of money with gas SUVs and pickups, offsetting some other weakness. I know you got earnings that you got your eye on.
Yeah, before we go any further, let's just get to Texas Instruments crossing the wire right now. The company is saying that third quarter revenue coming in at about $4.15 billion, and we're being precise because the street was looking for $4.12 billion. So a slight beat on third quarter revenue, a slight beat on third quarter EPS at $1.47. The street was looking for $1.37. Your forecast going forward, fourth quarter revenue, $3.7 to $4 billion. The top end of that range is below the average of street estimates. They were looking for 4.1, and their forecast for fourth quarter EPS, guys, 107 to 129. That's the range. The top end of that range below the average of street estimates. The street, guys, was looking for $1.35.
And when you look into the business itself, let's just look at the analog revenue, $3.22 billion, beating the consensus estimate of $3.17 billion. Third quarter operating profit, $1.55 billion, also topping the average analyst estimate of $1.46 billion. Notable that the stock is down about 2%. There was a lot of talk, a lot of ink spilled about this idea that valuations were really lofty for this name, certainly higher than a lot of its peers, given that AI is not the bulk of its business. The bulk of its business is in the industrial market, the auto market.
Yeah, and that stock is down about 2%, even despite the fact that the third quarter results were pretty good. Third quarter EPS beating estimates at $1.47. Third quarter analog revenue also beating estimates. And their operating profit for the third quarter coming in at $3.22 billion, which was also a beat.
I'm not getting a lot of commentary from Haviv Alan, the president and CEO of the company, in the press release. We're going to have to wait for the call a little later. But did note that the past 12 months, they invested $3.7 billion in R&D and SG&A and $4.8 billion in CapEx, returning $5.2 billion to shareholders. Shares in the after hours down about 2%. All right, let's get back to some of the gainers as we await Enphase Energy results in just a few minutes. As I was saying, GM shares having their best day in 4 years. The company signaled solid demand for its highest margin vehicles, even as the broader market softened. Better than expected results for the latest quarter. They raised the low end of its full year profit. The SUVs and pickups that people are buying, the old-fashioned gas vehicles, offsetting weakness in China, EVs, and then in that Cruise autonomous driving division as well. Let's talk Philip Morris International, the maker of Marlboros. It turns out Zyn is so hot right now. The company forecasts higher than expected profit this year, soaring demand for Zyn nicotine pouches in the U.S. Biggest one-day gain going all the way back to 2008. Shares higher today by 10.5%. The company said adjusted diluted earnings per share will grow as much as 15% for the full year, excluding currency movements. That's up from previously 13%. And finally, watching ADRs of SAP, shares rising to a record. Revenue soared over at the software company. It's transitioning customers away from locally run systems with the promise of AI tools and analytics. Higher today by a little more.
What are you looking
1%.
at there? What's on the ceiling there?
I'm
Is there
looking at
another
the
phone in
monitor.
the ceiling?
I'm looking.
That's where the gainers are.
Yeah, that's where the gainers are.
Oh,
They're up
really
there.
like the monitors here.
So Emily will be looking
the radio
down at the
studio.
floor. I assume.
Yeah,
Yes, exactly. Okay, well, I'm looking at three of the worst performing stocks in the S&P 500 today. Lockheed Martin shares fell 6.6%, the biggest intraday drop since March 2022 after its third quarter revenue missed expectations, pulled down by weaker aeronautical sales and ongoing issues with
Let me
its
just
F-3
jump in,
fighter jet
Emily,
program.
because we've got Enphase Energy share earnings coming out. This is the manufacturer of solar energy equipment. Fourth quarter revenue forecast missing analyst estimates, and this is the outlook of here. It sees fourth quarter revenue of $360 million to $400 million. Analysts were looking on average for $437 million, so that's a pretty big miss on that front. When it comes to fourth quarter adjusted gross margin, the company sees 49 to 52%. Analysts were looking for 47.8%. The stock is bouncing around a bit here as we report third quarter revenue of $380 million compared with the consensus estimate of $392.5 million.
Okay, let's get back to those decliners. Just finishing up on Lockheed, one of the other issues, bringing shares.
Sorry, I'm just going to
stock
interrupt you again,
down.
Jared, just for 1 second.
Nice try.
Emily, we're actually getting some preliminary results out of Starbucks. Those shares plunging in after hours trading right now. The company saying their preliminary fourth quarter comp sales down 7%. The street was looking for a drop of 3.5% here. So basically coming in worse than expected by a magnitude of 1/1. Fourth quarter net revenue, the company saying that will come in at roughly about $9.1 billion. Also saying that adjusted EPS will come in at 80 cents a share. The street was looking for $1.03. So a big miss here on comp sales, a big miss here on EPS and the bottom line. Not quite sure what the comparison is right now on the revenue side. Oh, there's your revenue guidance here. So 9.1 billion. The street was looking for 9.36. So Tim, a miss on the three key metrics.
Look, this is a company that has, the challenges have been well documented. This is why they brought in Brian Niccol from Chipotle. They were supposed to report earnings next week, next Wednesday, on October 30th. So coming out with these numbers, the company does say it reflects a challenged customer experience. Management is developing a plan to get back to Starbucks. They'll provide insights into its plan during the fourth quarter and full fiscal year 2024 earnings call. Shares moving lower in the after hours.
And they cited both softness in North America's revenue and then also said that the preliminary fourth quarter China comp sales are down 14%, which was worse than estimates. So really, I guess, a global slowdown.
And I do wonder, Scarlett, whether this is kind of, we're getting into that sort of kitchen sink trend where a new CEO takes over. They look at all the bad things and say, let's just get this out there now, get it out of the way so they can focus on the future. Of course, one of the other headlines, Scarlett, of course, is that they're actually suspending their full year guidance for 2025, which I guess shouldn't be too much of a surprise.
Yeah, I mean, it speaks to the idea that Brian Niccol wants to start with a clean slate here, right? He's going to set the terms for everything. And we should mention also that they are boosting their quarterly cash dividend to 61 cents. That's pretty much what analysts were anticipating, but he wants to kind of start fresh. He did make a comment saying that I've spent my first several weeks in Starbucks really listening to feedback from partners, engaging with the customers. Again, that idea that perhaps not that he gets a pass, but like he's not being judged here so much as the previous CEO because he's taking over and going to set a new path forward.
look, he's got his work cut out for him.
Yeah.
And I think the term clean slate is a good way to think about it. By getting ahead of these results, he just took the helm earlier this month, so he's got the
work. But I mean, look at the hole that he's digging here, or maybe not he digging. I should say the Starbucks has dug here. Fourth quarter China comp sales down 14%, way worse than expected. U.S. comp sales down 6% here. So we're talking about their most important market, the U.S., and a market that, of course, they've really flailed in China, that they were trying to get some traction on. At least in the short term, it's not there.
Well, remember, his experience is really stabilizing U.S. businesses. I don't know that he did a whole lot with overseas businesses, but he has to tackle the biggest part of the market first for Starbucks, which is North America.
All right, guys, 6%. We're going to continue this coverage of the breaking news, not just from Starbucks, but earnings numbers as well. We got other big earnings coming up a little later this week. That is going to do it for our cross-platform coverage of the market close on Bloomberg TV, Radio, YouTube, Bloomberg Originals. We'll see you guys tomorrow, same time, same place.